Investors are preparing for a major week with key economic data releases and numerous earnings reports from major companies. On Friday, the stock market closed with mixed movements, capping off a few volatile trading days. The Nasdaq ended up 0.6%, though it dropped from its intraday high. Over the past 7 weeks, the Nasdaq has risen by nearly 11%, showing a strong upward trend with a modest 0.22% gain just this week. The S&P 500 remained relatively flat, ending the week down by 1% and breaking a 6-week winning streak. Out of the 500 companies in the index, only about 150 managed to see gains. However, the S&P 500 is still holding a solid year-to-date gain of 21.8%. Meanwhile, the Dow Jones faced more challenges, dropping 0.6% on Friday and falling 2.7% over the week. McDonald's was a major drag on the Dow, plunging 7.6% due to ongoing E. coli issues, marking the company's steepest weekly decline since March 2020. Small-cap stocks also struggled, with the Russell 2000 losing 0.5% on Friday and 3% over the week. Declining stocks outnumbered advancing ones on both the New York Stock Exchange and the Nasdaq. We also saw increased trading volume on the Nasdaq, while NYSE volume fell slightly. In commodities, gold futures rose slightly to around $1,925 per ounce, while U.S. crude oil futures jumped 4.5% over the week to $71.78 per barrel. Yields on the 10-year U.S. Treasury note rose by 3 basis points to 4.23%, keeping pressure on rate-sensitive sectors like utilities. Looking ahead to next week, several economic indicators could set the tone for the Federal Reserve's meeting in early November. We'll see the preliminary Q3 GDP estimate, along with key data on personal consumption expenditures and employment. The European Central Bank will also announce its monetary policy decision on Thursday, with most experts expecting the benchmark rate to remain at 0.25%. The earnings calendar is packed, with over 150 S&P 500 companies scheduled to report. Some of the biggest names, often called the Magnificent Seven, are expected to influence market sentiment significantly. Alphabet will kick off tech earnings on Tuesday, followed by Microsoft and Meta on Wednesday, and Amazon and Apple on Thursday. Together, these 5 companies represent over $12 trillion in market valuation, and their guidance on sectors like AI, e-commerce, and digital advertising will be watched closely. Nvidia is another tech stock in focus. This week, Nvidia's stock hit a record high after climbing 2.6%, marking 5 straight weeks of gains. Bank of America analyst Vivek Arya has been bullish on Nvidia, pointing to a long-term investment cycle in AI infrastructure. Another company that's been making waves is Astra Labs. The chip-related company's stock rose 8.7% this week and is now trading over 42% above its 50-day moving average. Astra Labs has doubled in value since September and is set to announce its Q4 earnings on November 4th. Now, let's talk about Tesla and its CEO, Elon Musk. Tesla's stock surged nearly 23% this week, reaching $269.199. According to Market Surge, Tesla hit a buy point from a technical analysis perspective, now trading 16.8% above its 50-day moving average. Tesla has set ambitious goals for Q4, expecting to achieve record-breaking electric vehicle sales with over 510,000 units. Despite the challenges, Musk remains confident in reaching this target, and he's projected a 20 to 30% increase in Tesla's EV sales next year, aiming for 2.3 million units. Musk also emphasized Tesla's focus on autonomous driving, stating, "We are not manufacturing cars other than robotaxis." He warned that automakers lagging in autonomous technology might struggle to keep up with market demands in the future. The upcoming U.S. presidential election also presents an interesting backdrop for the market. Historical data suggests that the political party in the White House doesn't heavily impact stock market performance. Analysts at Deutsche Bank noted that, since the early 20th century, the S&P 500 has generally shown mid-teen total returns under most presidents, regardless of their party. That said, some presidents saw negative returns, typically due to economic shocks beyond their control. Overall, as we head into a critical week, markets are tuned into the earnings reports and economic indicators that could steer the path forward for the Federal Reserve's policies and impact sectors across the board. From tech giants shaping AI and e-commerce to Tesla's autonomous driving vision and crucial economic data, it's clear the coming days could significantly influence market sentiment as we approach the end of the year.